Good morning, welcome to Ainsley News. It's Tuesday the 20th of April. Of course, we're talking crypto. It's Crypto Tuesday. And last night and the weekend saw some brutal Bitcoin action. On Sunday, we saw Bitcoin plunge 15% within a matter of hours, dragging the rest of the market down with it. Despite this action, long-term fundamentals remain as strong as ever. Let's dive into why the dip occurred and why now may be the perfect time to enter. Speculation that the US and other regulators are looking to introduce tighter rules for crypto exchanges regarding reporting cross-border transactions, threshold transactions, and suspicious transactions, plus greater KYC to bring the sprawling sector into line with the fiat-based money transfer and remittance businesses. Additional rumours point to a whale sending 9,000 BTC to Binance and selling into the market. Popular crypto analyst Willy Woo summarised what happened on Sunday in a Twitter thread, writing the following. #market update, breaking it down post-mortem. We just saw the single largest one-day drop in mining hash rate since November 2017. The hash rate on the network essentially halved, causing mayhem in BTC price as it crashed. Here's that Glassnode chart here. The power outage in Xinjiang, which powers a significant amount of the BTC mining network, was known before the BTC price crash. 9,000 BTC was sent into Binance. Read that as a sell-off of those coins. I'd note that Binance serves volume from Asia more than from the West. It's likely that this was sent from a whale with closer knowledge to happenings in China. Here's another chart here, showing more detail. This sell-down was compounded by a sell-off of quarterly futures used by more sophisticated traders on derivative markets, which was already underway as early as the 13th of April. There's that drop here in this chart. The two combined sell pressures was sufficient to tip the price below liquidation levels, or 59k. This triggered a cascade of automatic sell-offs in a chain reaction. 4.9 billion contracts were liquidated, 9.3 billion including altcoin markets. 1 million trader accounts liquidated in total. Here's that chart here. The dip happened while unprecedented numbers of new users are arriving onto the network per day. There's been a retail influx in the last 2 to 3 weeks. Here's this BTC entity's net growth showing that influx. Strong holders are buying the dip. Another chart here. Supply profile, price when the supply last moved, now forming the largest cluster of price discovery since BTC was below 10k. Validation of BTC as a $1 trillion asset is immensely strong. 13.5% of the entire BTC supply last moved above the $1 trillion cap. Here's another chart here from Glassnode. The on-chain SOPR metric near a full reset, a classic buy the dip signal. In simple terms, profit taking by longer-term investors is completing. Very little sell power left unless investors want to sell at a loss from their entry price. And that's unlikely in a bull market. Another chart here. In summary, initial sell-off due to anticipation of miners going offline in China. Sell pressure was sufficient to trigger liquidation in short-term speculative positions, forcing price violently down. Long-term fundamentals are very strong. So while this massive drop in Bitcoin's price is unpleasant for hodlers, it should serve as a reminder of how unpredictable it can be. That's why if you're considering an investment, it should surely be for the long run. Despite one short-term blip on what looks to be Bitcoin's meteoric long-term rise, many investors and analysts still consider cryptocurrency a buy. This makes the current dip a great chance to load up on more Bitcoin investments or get your foot in the door if you haven't already. The trouble is knowing how much to buy. While dollar cost averaging can help, it's impossible to know if Bitcoin will continue its rebound quickly or sell off further, offering an even bigger discount. This is all the more reason to make a long-term investment. And that's crypto news for today. If you are interested in crypto, jump over to ainsleywealth.com.au. You can purchase any of our range of cryptocurrencies from there. You can also buy Ainsley's gold and silver standard from there as well. After the physical stuff, a little bit more stable, less volatile, jump over to ainsleyBullion.com.au for gold, silver, and platinum. And to do a bit of research, check out that stablecoin that we've built at goldsilverstandard.com. Enjoy your Tuesday. We'll catch you tomorrow for more news.